Okay, hi everybody, this is Mr. Manning, and this is going to be a video about how to record um, balances from a general ledger and subsidiary ledgers into a worksheet, and then how to complete the worksheet, including the adjustments and finding the profit or loss for the corporation. So a couple documents that you might want to have. The first one is the slides that I have provided to you. And each one of these slides goes through how to do the adjustments for a corporation. It also has like some key terms that you're going to need to know as well. And then the other document that you might want to have is this one, which includes a general ledger that's already been completed, a schedule of accounts payable, schedule of accounts receivable, and then finally a blank worksheet for this company called Hobby Shack. So we are actually going to start right here. And a lot of this is going to be very similar to what you did in first semester when you did this process for a small business. So the first goal is to take our balances from each ledger, so like our cash ledger, our supplies ledger, and so on, take our balances for those accounts and put them into the worksheet. So I'm going to do a few, and then I will pause the video and fill the rest in, and then we'll proceed. So first I'm going to start with cash. I can see that I have a balance of $21,321.33. So over here in my worksheet, I am going to put that in my cash section, and I need to make sure that it is on the debit. I can just type it out if I want to, or because we're using Google Sheets, I can ask it to pull that number directly from the ledger, which I'm going to do because that way if I happen to update my ledger later, it will also update in my worksheet. So I'm going to just type equals, click on my general ledger, and tell it what cell that it should equal, which is this one right here with the balance, and I hit enter, and it pulls that number automatically over for me. I'm going to do this with supplies as well, equals, general ledger, supplies, enter. All right, accounts receivable. So if you go to the general ledger and go down to accounts receivable, it is blank. That does not mean that we don't have any accounts receivable. What it does mean is that we created a subsidiary ledger for our accounts receivables. And I am not showing the subsidiary ledgers on this document because we don't specifically need each company that owes us money. What we do need, though, is our list of companies that owe us money and then the grand total. And that list is the schedule of accounts receivable, which looks like this. And the number that we are specifically interested in is this one right here, the total. So I am going to ask the worksheet to bring the number from that document over to here. Okay. So I'm going to go ahead and fill the rest of this out. When you get to accounts payable, also remember to get the number from the schedule of accounts payable. Okay, we're back, and you can see that I now have numbers throughout my entire trial balance. And I took those numbers either from the general ledger, the balances, or from the schedule of accounts payable and the schedule of accounts receivable, specifically the totals. Now remember, one of the very first purposes of a worksheet is to prove the debits and credits equal. So we now need to add up this column of debits and this column of credits, and we hope that those numbers equal. I have already done that for us, and I just wrote a sum equation here. I added up all these numbers, and they do equal $31,494.33. So that is a very, very good thing because now I can feel comfortable with moving forward with the rest of the worksheet. If these two numbers did not equal, I would want to immediately pause or stop and go find my mistake. Because if I continue on with the worksheet, it's going to be wrong. And there's no reason to continue to make further mistakes until you find this one. But we don't have to worry about that now because we've got two numbers that equal. All right, so the next thing is going to be adjustments. And I've got some adjustments listed down here at the bottom. Some of these adjustments are going to sound familiar to you because we did them in first semester. So for instance, supplies and prepaid insurance, both of those should sort of sound familiar. But there's also a couple of adjustments that are specific to just corporations. And one of them is the uncollectible accounts. And then finally, this thing called merchandise inventory and income summary. And I have put how to do these adjustments on the document that I mentioned earlier, this adjusting entries for a corporation document. So here's how to do supplies and prepaid insurance, and it says that it is done the exact same way that we did for a small business in first semester. But in case if you don't remember, I did kind of spell that out. So let's figure that one out first. Let's do supplies. So it says that right now my supplies equals $500. That's the current amount that I have. However, in my trial balance, I said that it equaled $700. So I need to determine how much supplies did I use during the month so that I went from a $700 balance to a $500 balance. And hopefully some simple math would tell you that we've used $200 worth of supplies. So I am going to put that as a credit, $200. That's how much we used. And since I have a credit, I must have a debit as well. So I'm going to go down to the supplies expense category and put a $200 debit there. All right, a little bit further down, it says prepaid insurance. It still equals 0, and I did not have any prepaid insurance, so I actually don't have to do anything with this one. If I did, I would do it the same way that I did the supplies. All right. Let's talk about uncollectible accounts. So I'm going to bring up this thing here. So an uncollectible account is an accounts receivable account that for whatever reason you have determined you are not going to be able to collect. So this is probably an account that's had a balance for a really long time, several months, maybe even years. And whoever owes us that money has basically refused to pay us. So what corporations do is eventually they have to consider these to be uncollectible. They cannot continue to call them an asset because in all likelihood they are not going to ever receive that money. So different corporations handle it different ways. Some of them, if it's been 6 months without any payments, that becomes uncollectible. It might be a year. It's really up to that particular corporation's policy. But regardless of the amount of time, eventually these become uncollectible. So what we do is whenever we determine that they are uncollectible, we record that as an adjustment. We take that amount out of our accounts receivable. So back over to our worksheet, it says that we have uncollectible accounts equal to $425. So we have determined that there is $425 of our accounts receivable that we are never going to get. So we have to record that as a credit. And the reason we do is because accounts receivable is usually a debit balance, so a credit would reduce the amount. So we're going to put $425 as a credit, and just like before, since we did a credit, we have to do an equal debit. So we're going to go all the way down here to the uncollectible accounts expense, and we're going to put $425 again. All right, and then finally, we have one last thing. It is merchandise inventory and income summary. So back over to our slides. Merchandise inventory. This is the current amount of merchandise that we have on hand that we plan on selling to our customers. So merchandise is stuff that you have that you're going to sell to your customers. It is an asset account. To determine merchandise inventory, you have to subtract sales from purchases. And this sort of makes sense if you think about it, because sales is the amount that we have sold, and purchases is the amount that we have bought or purchased. So the difference between those two, the amount that we bought and the amount that we sold, would be how much merchandise that we have on hand. So first we have to subtract those two amounts. When we do, we record the difference as a credit in the merchandise inventory section. We also record an equal amount as a debit in the income summary section. Notice this little note right here. If purchases is more than sales, we want to flip-flop these numbers. So if we bought more than we sold, we flip-flop it. And now merchandise inventory becomes a debit, income summary becomes a credit. So you first have to subtract these two and you have to figure out which is higher, sales or purchases, and then you have to record them in the correct spot. So let's find out for Hobby Shack what they've got here. So I'm back on the Hobby Shack worksheet, and I've got purchases right here, and I've got sales right here. Well, I can tell right off the bat, it looks like sales is much higher than purchases, right? So I need to subtract these two, and since sales is higher than purchases, I am going to record this as a credit. So in the credit section of my merchandise inventory, I'm going to write a really quick equation, and I'm going to take my sales number and subtract my purchases number. And I get 14,928. That is a credit, so my equal balance or my equal debit has got to go into the income summary section. So I'm just going to do this, equals this. Okay. You would now total these up to make sure that everything equals. I already have an equation, so I'm just going to move it over, and they do. All right. The rest of this is pretty much exactly like it was in first semester. I am now going to take these numbers from the trial balance, and I am going to put them into the balance sheet or the income statement. Remember, the income summary is our dividing line. In fact, I'm going to make that yellow real quick. The income summary is our dividing line. Anything that is on the income summary line or below goes to the income statement. Anything that is above the income summary goes to the balance sheet. So I'm going to do that real quick, and then I'll bring the video back up. Okay, and we're back, and you can see that I have taken these numbers and moved them over to the balance sheet. Everything above the income summary went over to the balance sheet. If I had an adjustment, I did a quick subtraction to find that number. Anything on the income summary line or below went to the income statement section, which is right here. And same thing with adjustments. If it had an adjustment, I had to first move it over. I now am going to total up all my debits and credits. So I'm going to still use the equation that I've already written. You can see that my debits and credits do not equal here, and my debits and credits do not equal here. And to be honest, they're not really supposed to. If they were to equal, that means that your company broke even exactly, and that is extremely rare. So now the last step is we have to figure out, did we make a profit or a loss, and how much did we make or lose? So we are going to subtract these two numbers, the debit and the credit, and we're going to put our number underneath the smaller one. So because the credit is smaller in this one, I'm going to subtract these two, 839, and the debit is smaller in the balance sheet, so I'm going to subtract these two, 839. We definitely want to make sure that those two numbers equal. If they don't, we then have a problem. But they do, so we're looking pretty good. Finally, did we make a profit or did we have a loss? And to determine that, we need to look in our income statement section. The credits in our income statement section is us gaining money. The debits in our income statement section is us spending money. So if credits are higher than debits, then we made money. If debits are higher than credits, we lost money. It appears that Hobby Shack lost $839 because the debits, the amount that they spent, was higher than their credits. Okay, thanks guys.